Hey guys, welcome back to the channel. Today, we have some game-changing updates that could shape the next big move in crypto. The patterns we've been tracking for months are playing out perfectly, and the data is pointing toward a major price recovery for Bitcoin and altcoins. In this video, I'm going to break down the Global Liquidity Index and show you how it predicts Bitcoin's next move with almost crystal ball accuracy. We'll also dive into what was revealed in the latest FOMC meeting, why the market is shifting, and which altcoins I've been buying heavily in anticipation of the next big surge. If you're serious about staying ahead of the market and maximizing your gains, hit that like button, subscribe, and let's jump in. Over the years, Bitcoin and the broader crypto market have developed a clear pattern linked to the Global Liquidity Index. This index measures the amount of money circulating in financial markets, and every time liquidity tightens, we see crypto prices pull back. However, once liquidity begins expanding again, Bitcoin and altcoins experience a strong recovery. Historically, every major bull run in Bitcoin has coincided with a surge in liquidity. This pattern has held true through multiple market cycles, and with the introduction of Bitcoin ETFs, the correlation between global liquidity and crypto prices has become even stronger. Institutional investors now have a much easier way to access Bitcoin, further reinforcing this trend. One of the key takeaways from analyzing this pattern is timing. Crypto markets tend to lag behind liquidity changes by about 10 weeks, meaning that once liquidity starts rising, Bitcoin follows shortly after. This lag is due to capital first flowing into safer assets like bonds and real estate before reaching high-risk assets like crypto. To visualize this yourself, you can use TradingView and add the M2 Global Liquidity Index. By shifting the chart forward by 10 weeks, you'll notice how closely Bitcoin's price aligns with liquidity trends. This is not speculation, it's data-driven market behavior that has repeated over and over again. Understanding this pattern allows investors to position themselves early before the real surge happens. Right now, we are seeing a liquidity uptrend forming, meaning that if history repeats itself, Bitcoin and altcoins are about to experience another strong upward move. The question is, are you ready? The latest FOMC, Federal Open Market Committee meeting, provided crucial insights into the Federal Reserve's approach to monetary policy. Many investors were hoping for a signal that interest rates would be cut soon, which would have been an immediate bullish catalyst for crypto. However, Fed Chair Jerome Powell made it clear that while rate cuts will eventually come, they're not happening just yet. One of the most significant announcements was regarding quantitative tightening. The Fed has been reducing its balance sheet by selling assets, withdrawing $25 billion per month from the financial system. But Powell stated that this reduction will slow down to just $5 billion per month, signaling a move toward quantitative easing, QE, in the near future. Why does this matter for crypto? Quantitative easing injects liquidity into the market, increasing the availability of capital. Historically, Bitcoin and altcoins thrive in environments where liquidity is abundant. Even though rate cuts are not here yet, the Fed's decision to slow balance sheet reduction means that liquidity conditions are already improving. Another major factor influencing the market is global liquidity beyond just the U.S. For example, China has recently injected $149 billion into its economy to stimulate manufacturing, and Germany is heavily investing in its military. These actions contribute to increased global liquidity, which benefits all risk assets, including crypto. This shift toward easing liquidity suggests that while we may not be in a full bull market yet, we are moving in that direction. The moment the Fed announces a rate cut, it will likely act as the final push that sends crypto markets into overdrive. One of the most counterintuitive yet effective strategies in investing is buying when fear is high. Market sentiment often swings between extreme fear and extreme greed, and data from Google Trends shows that every time recession-related searches spike, crypto markets tend to bottom out. This phenomenon happens because people tend to react emotionally to financial news. When the economy looks uncertain, retail investors panic and sell their holdings, driving prices down. However, smart money, large institutional investors, see this as an opportunity to accumulate assets at a discount. Right now, we are seeing a shift in sentiment. Just a few weeks ago, headlines were filled with concerns about recession and economic downturns. But as the Fed slows quantitative tightening and global liquidity increases, investors are regaining confidence. Crypto markets are already stabilizing, hinting that the worst of the fear-driven sell-off might be behind us. Timing the exact bottom is nearly impossible, but historical patterns suggest that we are in the ideal accumulation phase. Investors who recognize this early and position themselves accordingly have the best chance of capitalizing on the next big move. So, the question is, are you waiting for confirmation or are you taking action now? With the market showing strong signs of recovery, I've been strategically investing in altcoins that have both strong fundamentals and high growth potential. While Bitcoin and Ethereum remain solid choices, altcoins built on scalable Layer 1 ecosystems often deliver higher returns in bull markets. My focus has been on Layer 1 blockchains, ecosystem-driven projects, and platforms that show real adoption. One of my biggest holdings is Sui, a blockchain built by the former Facebook Libra team that introduced the Move programming language. Sui has been rapidly gaining adoption with TVL, total value locked, nearing $1 billion, indicating strong developer and DeFi activity. Additionally, Donald Trump's World Liberty Finance Fund has included Sui, making it the only post-FTX project in that fund. This institutional recognition, combined with growing adoption, makes Sui one of the most exciting Layer 1 projects right now. Another Layer 1 blockchain I'm watching is Aptos, APT, which was also developed by former Facebook blockchain engineers. While it hasn't performed as strongly as Sui in recent months, its TVL is growing and its market cap is lower, meaning it has more room for higher percentage gains. Aptos has also been working on developer incentives to attract more projects to build on its platform, which could drive long-term growth. Aside from Layer 1 blockchains, I'm also looking at projects that solve real-world problems. One that stands out is Walrus Protocol, a decentralized storage solution launching on Sui. It aims to compete with Filecoin and Arweave by providing a more efficient decentralized file storage system. As more Web3 applications emerge, decentralized storage will become essential, making projects like Walrus highly valuable. Another project worth noting is Sonic, formerly known as Phantom. Phantom was a major player in the last bull run, and with its recent rebranding and technical upgrades, it's attracting renewed interest. The total value locked, TVL on Sonic is climbing, and historically TVL growth has been a leading indicator of price action. If the momentum continues, Sonic could be one of the strongest Layer 1 performers in this cycle. Diversification is key in crypto, so my portfolio includes large-cap cryptos like Ethereum and Solana, emerging Layer 1s like Sui and Aptos, and high-potential ecosystem projects like Walrus and Sonic. By tracking liquidity trends, TVL growth, and market sentiment, we can position ourselves early for maximum gains. Stay tuned for my updated portfolio breakdown where I'll dive even deeper into my allocations. If you want to invest in these projects, choosing the right exchange is crucial. Major coins like Bitcoin and Ethereum are easily available on Coinbase and Binance, but for mid-cap and small-cap gems, you'll need platforms like Bitfinex and MEXC. These exchanges offer a wider range of crypto assets with lower trading fees. One of the key advantages of using these exchanges is that they don't require KYC, Know Your Customer verification, meaning that users worldwide can trade without restrictions. However, always check regulations in your country before signing up. In crypto investing, having access to early-stage projects is a huge advantage. While big names like Ethereum and Solana are great for stability, smaller altcoins that are just beginning to gain traction can offer higher risk-adjusted returns. Being able to buy these assets before they explode in price is a key strategy for maximizing gains. Remember, this is not financial advice. Always do your own research before making any investment decisions. The market is constantly evolving, and keeping up with trends is essential for long-term success. By subscribing to the channel and turning on notifications, you'll stay updated on market shifts, emerging projects, and portfolio strategies that can help you navigate this bull market effectively. Let's ride this wave together. That wraps up today's video. If you've been paying attention, you now have a clear roadmap of where the market is heading. The liquidity index is turning bullish, smart money is positioning themselves, and some of the best altcoins are still undervalued. Now I want to hear from you. Which altcoins are you watching? Do you agree with the analysis, or do you see something different? Drop a comment below and I'll be reading through all of them. Make sure you subscribe and turn on notifications. See you next time.